Welcome to Everyday Economics, a podcast that helps you learn about the economic world happening around you every day. I'm your host, Chris Krug, president of the 501c3 nonprofit, nonpartisan Franklin News Foundation. Everyday Economics is a production of America's Talking Network. You can check out all of our great podcasts at americastalking.com. We are recording this episode on Wednesday, April 12th. And joining me, as always, is my friend, the great Dr. Orphe Divounguy, PhD economist. Dr. O, Consumer Price Index information came out today. Drum roll, please. Consumer prices increased over 5%, or about 5%, from a year earlier, down from 6% in February, and a 40-year high of 9.1% last June. I'm stealing that straight out of the USA Today story that published just this morning. What do you make of this? It's a two-year low on the inflation side.
We're coming back to earth, that's for sure. Consumer prices up 5% year over year. So headline inflation slows a lot from last month. It was up 6% last month. So you're seeing these big declines in headline inflation, mostly driven by the declines in food and energy inflation, which is really good news, right? So I think we were worried for a lot of families because food prices were out of control. And so you have this slowdown in food and energy. Especially energy, right? The energy index fell 3.5% in March alone, after decreasing only 0.6% in February. The food index rose in March, but again, big slowdown from when you look at food price increases year over year. And then you have shelter, the shelter component, which again was one of the main drivers. It is still the main driver. It's the largest contributor in the core CPI increase this month. At least, the good news on that front is that the monthly increase is the smallest increase in over a year. It shows that perhaps we have turned a corner. Services without housing were flat over the month. That is very, very interesting. So it shows we're turning the corner. It shows disinflation is very much underway. And given that we know CPI rent tends to lag market rents, and now we're starting to see CPI rents slow down, I expect big disinflation for the rest of the year. So it's all good news. This CPI report, I think, is very much good news for those who are hoping inflation would finally come down. Now, it doesn't mean the Fed's not going to do anything about this, by the way.
Let's talk about that. So you get a report that kind of lands in, I would say, nobody's thrilled that we're still 5% above last year, right? Nobody's thrilled by that.
Of course, prices are still very high, for sure.
Right. Prices are high, but they just didn't go that much higher. So the Fed, it's been pulling levers now for, 16 months? So what do you think they're going to do?
I still think the Fed might give us another rate hike, maybe one more rate hike. I think it's very much, in the middle. You're probably going to have people on the FOMC who are going to be in favor of a pause. I think even last month, there were some people that were already in favor of a pause. I think we still have one hike to go, potentially, given the fact that core inflation is still, 5.6% year over year as of today. And that if you look at, 6-month annualized core inflation or 3-month annualized core inflation, you realize that core inflation is not coming down all that much and that it remains very high. And so for those reasons, one more rate hike might be in the cards. But other than that, I think we're going to be happy to see long-term rates decline based on this report. I don't know what the yield on the 10-year Treasury is doing right now. But, if you see these long-term rates decline, you're going to see the yield. It's falling already on the news this morning. And then, mortgage rates will also decline for those in the housing sector who are concerned about mortgage rates. And so, you're going to start to see the market start to anticipate a much slower pace of growth for the U.S. economy in 2023. And again, the potential for even slight recession.
Well, I'll tell you, these numbers are for March, right? And we're already 12 days into the month of April, or this is the 12th day of April as we're taping it. I spent a better part of the last 2 weeks on the road, and I was down south. I was in Florida, Georgia, Louisiana, Texas. I was astounded at what the local fuel prices were when I was down there, not knowing that back here in suburban Chicago, where I live, that fuel prices had gone even crazier. And that seems to have taken off quite literally with the flip of the calendar into April. We're at $4.09 a gallon for regular gas. And I mean, it's just April. Typically you get to the peak on fuel pricing. I guess it would be around July 4th, right? I mean, that's kind of the big travel time in the summer. There's certainly an escalation between Memorial Day and July 4th historically. I'm a little concerned about that. The grocery prices, I would agree that they seem to be under some level of control, but with fuel prices up, can they stay down?
When you look at food, biggest push on the inflation front, it has been food away from home, right? And so, people eating out and stuff, and even that's starting to flatten. The last 3 months or so, food away from home has remained flat. So I expect, food at home has fallen, decelerated 0.3% down 0.3% month over month. And so you start to see food price on a monthly basis decline, groceries, right? And so I think this is good news for families, giving them a little breathing room. And then when you have borrowing costs also falling on the news, I think that's going to be really, really helpful for many families. And that's what the Fed set out to do from the get-go. Price growth is slow to come down, but we're getting there and we're seeing a ton of progress.
I appreciate your thoughts as always. For Orphe Divounguy, this has been Chris Krug. Subscribe to Everyday Economics and dozens of other quality podcasts at americastalking.com.